We heard from the Federal Reserve this week that interest rates are going to stay higher for longer. We expect that interest rates will begin to drop toward the latter part of 2024. Now, a big move in interest rates will hurt certain industries and will benefit others. Today, I wanted to focus on how high interest rates benefit the insurance industry. The reason for it, insurance companies collect premiums from the people that take out policies, whether they're buying an auto insurance, they're buying healthcare, and so forth. And these insurance companies collect all that money and have it ready to pay claims. In the time that it takes to pay those claims, they get to invest that capital. If interest rates are high, they make a lot of income off that capital. Additionally, a well run insurance company is also going to make a profit. So, that said, I believe insurance companies are going to have a very good 2024. So I'm investing in insurance companies, and I wanted to highlight four insurance companies that I believe are going to do well in 2024. And therefore, I'm buying these shares in these companies. I already own stock in all these companies. I'm going to be buying more shares. The four companies that I'm buying shares in: Allstate, Prudential, Cigna, and Allianz. Allstate for the last 3 months, year to date, it's doing well. It's up 15.5%, and the company has a market cap of 42 billion. So it's a mid cap stock. Their revenue is 57 billion. They haven't been profitable over the last couple of years, but they really have gotten their business together. And I think the latest quarter was nice and profitable. I expect 2024 will be profitable as well as 2025. The forward PE is 12.5, really low PE compared to the S&P. Several analysts cover it. There's a buy rating on it, and they have a price target of $159 per share, right around the stock price that it's currently at. The company in 2024, it's doing well, but if you look at the last 12 months, it's doing great, 44%. And if we look at the 5 year, as a value investor, I like seeing this because you can pick up really good companies like these at really low prices. This is where I tried to buy a lot of my shares of Allstate. So you can wait as a value investor for prices to come down. You did your homework, you buy them at a great price, and then you see your stock price go up and you see the value of your investment really fly up. Prudential is more of a life insurance company, and they provide policies for life insurance as well as other types of benefits. They also do annuities. So they're a diversified life insurance company. They pay the highest dividend of them all, of the stocks that I'm showing. They pay a 4.5% dividend. And for 2024, the stock is up almost 12%. So it's nice to see a 12% gain in just less than 3 months, and they pay a nice dividend. The company has a market cap of 41 billion, and their revenue is 54 billion. They're nice and profitable, and their forward P is only 8.45, which is incredible. If you consider the S&P is at 26. Several analysts cover it, and they have a hold rating, and they have a price target of $100. I happen to think it's valued more, and I have a video on Prudential on my channel where I value the company. Looking at the last 12 months, the company's doing well. Last 12 months, they're up 40%. And again, they pay a 4.5% dividend. So a really nice dividend rate. Over the last 5 years, again, as a value investor, I like seeing this volatility where you can pick up shares in quality companies at a discounted price and then watch your investment go up in value. Elevance Health is the biggest cap stock that I'm going to highlight. They have a market cap of $120 billion. They have been consistently profitable with a forward PE of 13.7. They're up 9% in 2024, and they're up 9% in the last 12 months. So there's been a buying opportunity on Elevance. This is a real consistent company that has historically really performed well, and I expect they're going to perform great going forward. There's multiple analysts with a buy rating on this stock, and the price target is $569 per share, and the stock's only at $515 per share today. The fourth and final company I'll cover is Cigna, and they are doing great in 2024. They're up 17.4%. For the year, 12 months, they're up 27%. And over the last 5 years, you could see that they've had an upward trajectory, but have had moments where you could really pick up the stock at a really nice discount. And one very recently, that's where I started buying shares, and really I'm sitting on a nice short-term gain because the stock was nicely discounted. The company has a low forward earnings PE of 12, a strong buy from multiple analysts, and the price target of 367, which is slightly above their current stock price. Higher interest rates are really going to help all these insurance companies make lots of money in 2024. They'll just have a lot of capital to earn 4 to 8% on these treasuries as well as bonds. And I think that these well operated insurance companies are really going to impress investors in 24 and stock prices should go up. I'm really glad that I own them, and I'll continue to buy shares in all four of these companies. I hope you found my video interesting, and I appreciate you watching.